Henri, what is your approach or what is your mindset that you take into having these conversations with your clients when you're laying out their options for discount points or not?
No two clients are the same. And to this day, I don't think I've written the same loan twice. That's exactly, the DNA is exactly identical. It's not even fingerprints on twins are different, right? So I don't think every client should be approached the same. I think you really need to figure out what's going on in the client's life. How much are they saving after all their payments are made? How much they've left over in checking and savings right now currently? Are they a flat tire away from bankruptcy? Can you help alleviate stress in their life, right? To allow them to achieve their financial goals. That's where points really come into place.
Welcome back to Good Better Broker as we welcome in Michael Sala and Henri Humani. They are with Zoom Home Lending based right here in Metro Detroit. Michael, Henri, thanks for being with us.
Thank you for having us.
Thank you. Appreciate it.
So a little bit about you guys. You both come from a retail background. Michael, you've been in the business for 20 years now. Henri, 10 years for you. And it's incredible to see the growth of Zoom Home Lending. You guys just started the company this year, and you're already at 60 people on the team. And this topic that we're going to get into today, guys, is such an important one in the industry, and it's something that you guys know a lot about, and that is selling discount points. So as we get the conversation started, Henri, for starters, let me ask you, in your mind, what is the importance of being able to sell discount points to your borrowers?
That's a great question. I find it very, very important depending on the borrower, the specific goals of the client. Are they staying in the home long term? How's their cash flow looking right now? How can I alleviate financial stress? Anytime we talk to a client, our bankers talk about two different benefits to the client. There's a tangible benefit, intangible benefit. The intangible benefit being the relief of stress with the financial savings, and then tangible, obviously, the actual savings. There's a lot of times where selling discount points makes us make more sense than another lender. So yeah, absolutely, quite a bit.
Michael, what about you? When you think about how important this is to the life of a mortgage loan originator in this market, what comes to mind?
I think about how competitive you want to be and if you're able to analyze the numbers. So really, if you invest in, for example, buying down an interest rate for a client, does that make sense if you weren't to buy it down? And how long does the client plan on living in the home? And then when you look at the recoup time and how long that takes, that's going to distinguish whether or not it makes sense. So if you have the knowledge to, in mortgage business, I would say it's more common sense to say to yourself, it's my fiduciary responsibility to make sure I'm putting the client in the best financial position. So I'm going to analyze any angle possible to make sure that I do. Investments into their mortgage, discount points, or no discount points.
You mentioned the word knowledge, Michael, and I want to ask you more about the education piece because, as much as we sit here and can talk about selling discount points, you guys really believe this is more so about educating the client. Is that right?
The more you educate a client, the better it is, only because they not only feel comfortable working with you, but they don't feel like you're pulling a fast one on them. I'll tell you, there's back in the early 2000s, there was this thing called a deferred interest loan. And many clients would get into that program not knowing what it was about. So when the mortgage crisis happened in 2007, 2008, it really said a lot about, mortgage experts at the time, if you can claim them as experts. Did our mortgage experts put people in the best financial position, and did they have their best interests in mind? The less people know, the more concerned and questionable they become about the mortgage experts. So yeah, educating them and letting them know creates transparency, but also confidence in your client's willingness and able to do business with you.
Henri, I feel like it's fairly well known that the broker world is a bit behind retail when it comes to the art of this, of discussing discount points with borrowers. Take me through kind of your education process, having worked in retail and really learning how to do this effectively.
Yeah, that's a good point. So it's no secret on the retail side that the margins are significantly larger. So believe it or not, I had no choice but to sell discount points. Otherwise, I was selling a rate or presenting a rate to a client that was out of market, right? That was significantly higher than other banks or brokers. So it was just taking what I learned from retail, applied it to the wholesale business. But my training came into play. Really numbers focused off amortization schedules, life of loan savings on interest, pay what you pay now, paying off the home sooner, trying to help clients find a way to pay the home off as soon as possible to become debt free as quickly as possible, and making my payment lower, more competitive, and utilizing more monthly savings. That was the bigger thing, right? So if like a client was saving $170 a month, and I know if we buy some discount points, we can get it over $200 a month. It makes the presentation to the client significantly easier with a higher monthly savings number.
Do you know enough about your client to determine whether or not you're going to make the right decision? I think about it, and I've been through some scares in life when it comes down to like a medical field or whatnot. And, a doctor's not going to just look at you and say, all right, you look sick, so here's a prescription, but they're going to go deep and ask you questions, historical questions about your health. How you feeling right now? And then they're going to say, here's how I could diagnose you. And what Henry's saying is basically, I'm going to go deep. I'm going to uncover whether or not this does make sense for you.
So to piggyback off of that, Michael, let me ask you this. In your mind, which sales skills are going to be most valuable to LOs in these conversations with clients when they are talking to them about the possibility of discount points?
Knowledge and being a guru of your products. A product guru is what I would think. If you know your guidelines, understand the rate sheet, watch the market, it'll build your confidence and ability to communicate that to a client. If you don't know really what you're selling and you're just presenting rate, and you look at something and it's an option for your client and you present it to them, is it really the best option for your client if you don't know what your products are, you don't know what your guidelines are, you don't know what the difference is between 0 point rate, half point, 1 point, 2 points? There's no professional who's sitting back and saying, well, rule of thumb in the mortgage industry, you must buy it down by 1 point. Why isn't it a half point? Why isn't it 2 points, 3 points? The only person that's going to know best is the person speaking to the client and digging deep with them and understanding what's going on with their situation.
No, it's a great point. Obviously, It's something that we preach here, really customizing a loan, customizing the options for each borrower depending on their individual situation. Henry, what is your approach or what is your mindset that you take into having these conversations with your clients when you're laying out their options for discount points or not?
That's a great question. So at Zoom Home Lending, a lot of our bankers, what we're taught to do and what we do with every client to make sure we're giving everybody the best experience possible. First and foremost, I want to know at the end of every month, after all your bills are paid, how much money you have left over. I know inflation's been pretty high for the last 3 years. Milk is like $7 a gallon if you're getting it for your little kid. I have a 1-year-old at home, and I see what my wife buys my son. It's like $7.49. Eggs, everything's gone up, right?
Well, I saw a little monster. He could drink too.
Yeah, he can drink. He can drink like 12 ounces in every setting. So, but I was looking at something the other day too, not to piggyback off anything, but I saw that America, the credit card debt is at 1.141 trillion, I believe. And 3 years ago, it was like 740 billion. So we've doubled the credit card debt in 2 years. What does that tell you? Americans don't have money they're saving, right? So what I do is I want to figure out, number one, how long are you staying in the house? Because reality, if you're selling the house in 6 months to a year or 2 years, you're not going to recoup the investment. I'm not doing the best for you. And I'm going to explain to you, hey, here's the discount points. Here's the options for the discount points. Here's with no discount points. Here's why I'm going with no discount points. And guess what I'm doing? I'm earning trust from my client. They're going to refer other people over to me, and they know that I'm a subject matter expert, right? If I know my client has 2 kids at home, they're not saving money, they're going to be in the home long term, it's their forever home, then I'm looking to buy some points to save them some money, and I can show them, hey, if you save this money, you can take the $300 a month savings, apply it towards this credit card debt. This credit card debt gets paid off, guess what? In 6 months, now you're saving $500 a month, and you apply it to the next thing. It's a snowball effect, and now when we get to the point where, your kid's getting ready to go to college, if we start putting some savings away, when they're in middle school and it starts to snowball, you're going to have enough money so they're debt free when they leave school. So it really, really depends where the client's position is, because no 2 clients are the same. And to this day, I don't think I've written the same loan twice. That's exactly, the DNA is exactly identical. It's not even fingerprints on twins are different, right? So I don't think every client should be approached the same. I think you really need to figure out what's going on in the client's life. How much are they saving after all their payments are made? How much they've left over in checking and savings right now currently? Are they a flat tire away from bankruptcy? Can you help alleviate stress in their life, right, to allow them to achieve their financial goals? That's where points really come into place.
It's such an important point, and to me, everything that you just said illustrates the fact that mortgage loan originators need to look at themselves as advisors and not just somebody who's going to do a mortgage for somebody. Go ahead,
I
Michael.
just want to
Yeah.
share something, but people have to have that passion and care for their clients. But as a mortgage brokerage owner, you have to create that type of environment with people to where they want more of it. That level of education is a drug. If I give you a little bit of that education and you're like, wow, my confidence has grown, how can I get more of that? Because I know it's going to help me, and they're going to continue to come to you rather than you go to them to educate them on how to do these things.
Yeah, perfect point. I mean, who would not get excited about the prospect of being able to save money in a way that they previously did not know about until that conversation that you had with them?
At Zoom Home Lending, it's a priority for us to make sure that our team members are educated so that when they get on that call, you don't get a ton of these calls. So when they do get on that call, they have the client's best interest in mind. They have everything filled out as far as the client's goals, how long they plan on living in the house, what type of debt they have. And then even if the client doesn't say the things that you want, you doing that research alone allows you to really figure out the right situation. But you want to come prepared. The more prepared you are, prepares you for doomsday or whatnot.
Henry just made some great points about credit card debt. Michael, what about home equity? Because that is also at an all-time high when you look across the country. How does that impact a conversation about points?
From home equity? From a home like leveraging the equity inside of the home? We have home equity loans for our clients, and you could buy them down like you could with a first lien. No different. We would like to look at it no different than you would a first lien. From what Henry said, it'd be identical.
Okay, fair enough.
And I think in essence too, a lot of clients so certain clients that you speak to, they want to take equity out of their house to pay off their credit card debt to save, unilaterally more money on a monthly basis. But sometimes you'll have the client that goes, you know what, I want to do that, but I just can't go over $4,000 a month on my mortgage payment. I just can't do it, right? And you're like, let me see if I can do it. He goes, everybody else, they pitched me loans and they told me, it's $4,200, $4,100. It's out of my budget. I don't feel comfortable. I know it's going to save me money on a monthly basis. I just got to be under that $4,000 number. And I can't explain to you how many times we've gotten under that $4,000 number by buying points on the wholesale side.
Yeah.
I can't tell you how many clients I've heard over the years of doing mortgages where a client said, I have debt, but I have a great mortgage, first mortgage. I got like a 3% interest rate on my first mortgage, and we let the client off the line. Well, there's other ways of saving clients money, and that's, to your point, a home equity line of credit and consolidating debt. So keep your first lien, leverage a home equity line of credit, and pay off some debt.
Yeah, there's so many people in that boat right now.
It's tax deductible. Credit cards are not. Seek your CPA or accountant for that advice, but to my knowledge, it is.
All right, I want to ask you guys about presenting options up front. We kind of touched on this a little bit earlier, but this one is really, really pivotal when it comes to keeping them on the phone, if you will. Michael, tell me, why is it easier to overcome the objection up front of, your costs are too high versus them coming back to you and saying, well, why did you offer me a higher rate up front?
Well, I look at rates and fees in an inverse relationship. The higher the rate, the lower the fees. The lower the rate, the higher the fees. And you got to pick and choose your battle there. What would make the most sense for you? I like to provide my clients these options. Here's option A, a higher rate with lower fees. Option B, a lower rate and more fees, or somewhere in the middle. I usually find that most clients choose the option somewhere in the middle because they don't want to feel like they're too much of one area and too low in the other. It's a fair balance. So in my mind, I think to myself, like, if you are giving your client options and they don't feel like you're in total control, they feel like they still have an obligation to take care of their own mortgage and make decisions on their own mortgages at the same time, but it's like a joint venture, then it's an objection you probably won't get.
Henry, when we talked on the phone before the interview, one of the things that we touched on was kind of the psychological factor of paying for points.
Yeah.
Because, I think what a lot of borrowers think to themselves when they hear points, oh, I'm not paying for that. I don't want to pay for that. Come on, get out of here. But you guys approach this a little bit differently. Tell me about that.
Yeah. Every client sees a low rate, right? Because they get the mailer, they see the advertisement, but then there's always that higher APR attached to lower rate, which is the buying the points essentially a lot of times. And what I've come to learn is the reason we like to pitch 2 to 3 options per client is because I've found that if you just pitch the higher rate option, no points because you're afraid of the costs, that a lot of times the client will be like, okay, why didn't you give me the lower rate? What about the lower rate? And you go, oh, I can do that. Then you show the lower rate and they're like, oh, well, you withheld that lower rate from me initially. They lose trust, right? So one of the things we like to do with pitching 2 loans at once is kind of what Michael was saying was the educational standpoint, where we'll do points, no points, they see it visually, and then you can explain to them the difference in the savings, the interest, and then they can make that the educated decision. Excellent, which option would you like to proceed with? Which one do you feel like works best for you? But I've always been of the theory that, hey, if I can show you the lower rate, because that's what you see out there anyways. Everybody advertises lower rate on bank.com, at bankrate.com, everywhere you see. Now you understand, okay, he showed me both, I get it. You're not withholding the lower rate for me. Because believe it or not, some of these clients think that we're wholesale lenders, that we're making the interest on the loan, which we're not, right? So you don't want the client to believe that, oh, I'm giving you a higher rate because I'm trying to make more money on you.
I want to make sure our listeners understand something, because you just said it, when I show you the rate.
Yeah.
What this actually means for you guys, you will actually give them a visual, right? You will actually show them what the 10-year treasury yield looks like. You will actually give them something to look at. Michael, tell me about that, why it's important to actually put something in front of the borrower's face that they can actually see, and how much easier that makes all of this to digest for them.
I'm telling you, it's all education, but it's simple math. It's very simple to look at something and understand whether or not it makes sense for you. If you give away too many options, it becomes an analysis paralysis type of situation. You end up not making a decision at all. And you don't want to do that. So you really need to simplify things. The more simple it is, the easier it is for people to conceptualize. So like I said earlier, I'd like to give clients a decision. Like if they call in and they say, like, I saw that interest rate of 5.5%, I want that. I'm going to present that option, but I'm going to say, and sometimes I'm like the opposite, I don't know that makes the most sense for you. Because I want them to ask, the next question would be what?
Why not?
Why not? Well, let me go ahead and break that down to you as to why. And then because I dug deep in the conversation, I was able to uncover goals, I was able to understand their financial situation, I can talk them through as to why it doesn't make sense to present another option. And they could say, it doesn't make sense to buy down this interest rate, or it does make sense to buy down this interest rate. Thank you for sharing that option. Now it makes an easier decision.
And you just, I just want to touch on one thing you just said. The fact that you actively engage them in the conversation. Yep. I mean, you're clearly the expert here. You're the one who's teaching them. You're the one who's telling them what their options are. But the way that you're, and I don't want to say dumbing it down, because I think that's not the right term to use, but you essentially are. You're making it so that they can understand it better, and then you're engaging them. What would you say the impact of that is? Well,
real quick, just think about that for a second. We do this every day.
Yeah.
So like, it's not like I can go walk into an empty vacant lot because I want to go eventually find some land and one day buy a barn dominion. I don't know if you ever heard of that.
Oh yeah,
before.
barn dominiums.
But I'm not going to build that on my own. Why? Because I have no experience in it. So if anybody was to talk to me about how they're going to build the house, I'm going to say, I don't care, just figure it out, type of thing. But when you do this every day, you have to remember that the clients don't do this every day. So you have to figure out how to simplify things for your clients. So like there was a presentation we had with a client the other day, and we had this beautiful product in the home equity line where you can draw cash out of it, and you have 3 years to draw cash out of it, but it's fixed for 20 years. Our banker overcomplicated it, and the client was really confused. So I joined it, simplified it, and changed my terminology so that they could understand it in today's world. Not my mortgage brain, but in like the everyday world.
Yeah. Henry, what's that like for you? Because obviously, like Michael just said, it can be paralysis by analysis, and you guys obviously comb through all of the data points when you're trying to figure this out. But how do you kind of also balance that with making sure that the borrower understands what you're saying and that they feel like it's something that they, are on the same page with? Yeah,
kind of to say what Mike said right there is, we do this all the time. We interpret over thousands of mortgages a year. A client probably does it 3 to 7 times in their lifetime. Right? So we can digest it, but if we talk too much mortgage with the client, it's really not digestible. Now, there's something you said earlier that I want to go back and touch on. You talk about us visibly showing a client something, right? There's 3 different type of learners in this world. You're either kinesthetic, you're visionary, or you're auditory, right? Me personally, I'm a kinesthetic learner. So if I get a package in Amazon that I have to put together in my house, my wife got me or got the house, I pull it out of the package. I start putting things together. If it fits and it looks right, perfect. Guess what? If it doesn't fit, next thing I do is look at the package. I look at the picture. And then my last thing I do is I go read the instructions, right? That's because I'm literally kinesthetic, then visionary, then, however you want, auditory. So clients are the same. A lot of clients you're either majority of the clients you're talking to over the phone, right? So what we've learned over time is that if we have a banker who's a kinesthetic learner, they do a way better job explaining things to a kinesthetic client, because they're explaining things in the way that they would need to explain to themselves. If I have somebody who is a visionary learner and they're talking to a kinesthetic client, usually there's a breakdown in the communication. So we believe in, hey, we're going to talk you through it so you can listen. We're going to have you write it down so it's kinesthetic, and it's going to be in front of you so it's visionary. So we like to touch all three different aspects of the learning style, so that way we can ensure that the clients are retaining all the information appropriately.
Got to dial down to a science.
I mean, this is psychology, man.
Yeah.
By the way, I'm the complete opposite. When I get something, a package delivered, a piece of furniture from whatever, Wayfair, what have you, I'm looking at the instructions right away. Why? Because I don't want to try to put it together myself, and then I'm wrong. I end up having to take it apart and start all over from the beginning. But
so if I was talking to you 10 years ago, when I started mortgage banking in 2014, oddly enough, next to him, he was my regional vice president for a while, right, when I first hit the floor. But if I talked to you when I was new, you probably would not have transacted with me, because I would have explained it to you the way I would have interpreted it, and your brain's wired differently than mine.
Well, it just makes sense that you guys are looking for the right fit.
Correct.
Right? So much of this business is finding someone who you can relate to, and that's just going to set you up for success, not only throughout the transaction, but also set you up for those referrals that you're looking to get at the end.
Yeah, because if this was all about just rates, everybody would be able to do this. It's a little challenging in the market today, but not everybody can do it. But the people who genuinely care about their personal growth, educating themselves, asking their team leaders whether or not a specific program or product makes sense for their clients, they're going to find more success. I think it was I was going to share some other quotes, but it's okay.
That's all right. There's another question I want to throw at you guys, and you might have gotten this before, whether it's from other, brokers you encounter or LOs that you hire, when it comes to discount points. And Henry, tell me, is there a certain dollar figure that the client has to save to do the deal, or is this just strictly based on everybody's individual situation is different?
Everybody's situation is different. Yeah, there's not a certain dollar figure, right? Like, I've saved people $70 a month, and it literally changed their life. And I've saved people $600 a month, and they looked at it like, that's $600 a month. I don't know, it's not worth my time, right? And so every single person's different.
And some people would look back and say, what, are you kidding me? We're saving you $600 a month.
Yeah.
Why wouldn't this make sense? I'll tell you why. Because you didn't find out really what the need is, the true need is. There's more to it than just that. I had a client on the line yesterday where they had a 7.25% interest rate. Can we reduce their rate? Yeah, we can. And we're going to save him a few $100s. But he wasn't looking to take any equity out of his home to save any money at all. And that's fine. He wanted a home equity line of credit, and that's fine as well. But I said, what you could do is reduce that 7.25% that you're in right now, save a few $100s off your mortgage. Well, nobody's ever told me about being able to do this type of option. I wasn't even thinking about that. I was thinking about a home equity line of credit. Both options are great, but do you present those to your clients? Do you share with them what makes the most sense? That opens up the door to keep a client on the line, because you want to do that and you don't want to get blown off.
You guys have given our listeners a lot to think about and a lot of great insights, but I want to ask you this to kind of wrap things up. If you were talking to another mortgage broker, another mortgage loan originator, and giving them your advice on the most important things when it comes to having these conversations about discount points, Henry, you go first. What are you telling them?
Active listen, ask open-ended questions, and diagnose your client's financial health and well-being appropriately on your first call, so you earn the right to present them a loan, whether it has discount points or not.
My advice would be, as a broker owner, I would say make sure you have subject matter experts on the phone with clients. Don't allow them to just walk into the day as if it's going to be a bar fight, but give them the tools, resources necessary to know how to buy down an interest rate and identify whether or not it makes sense or not, questions to ask clients to know whether it makes sense. And then you will find that you'll see more success with educated professionals on the phone with your clients versus not.
Yeah, and the one last plug, I mean, brokers are better, right? We're on the podcast right now too. I'm a firm believer that the broker community is better for the consumer. They're saving money, it's better, but the way we continue to grow as a community and we retain more clients is through client service. So if we are a subject matter expert, we're showing clients discount points versus no discount points. We're showing we actually care about the clients and have compassion, because we really should. Or you shouldn't be in this business. That's my honest belief point. If you don't care about people, then get out of this business, please. You'll be very surprised with how many clients will tell their friends, their families, and before you know it, the brokers will have 75 to 80% of the market share. Right, and that's where all we're striving to get to. So I think it's very, very, very important that you actually care and you have a lot of compassion for your clients. It's super important.
And what I've noticed with brokers is that a lot of people really understand their guidelines, their products, and what they could do for their clients, versus those that just have a standard 30-year conventional loan, and that fits in the plug for a lot of clients. But what about those other clients who need the additional help? So there's a huge care factor when you work with a broker to understand that there's so many different products and different knowledges.
Well, you guys are certainly a great fit for what we stand for and what the broker channel stands for, and it's great to see all that you are doing. And like we said, this company is still in its infancy stages. So continued success to you guys, and thank you so much for sharing with us. Michael Sala, Henri Humani from Zoom Home Lending. Thanks for being with us.
Absolutely, thank you.
Thank you for watching Good Better Broker and helping us support independent mortgage brokers everywhere. Be sure to subscribe to our YouTube channel to be notified about new videos, as well as your preferred podcast platform for a new episode every other Tuesday.